Ladies and gentlemen, good day and welcome to the Inox India Results Conference Call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal the operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you, and over to you, sir.
Thanks, Darwin. On behalf of ICICI Securities, we welcome you all to the Q3 FY24 Earnings Conference Call of Inox India. To discuss the result today, we have with us Mr. Siddharth Jain, Director, Mr. Parag Kulkarni, Executive Director, Mr. Deepak Acharya, Chief Executive Officer, Mr. Pawan Laugar, CFO, Mr. Sunil Lavati, Investor Relations Officer. We'll start with a brief opening remarks followed by Q&A. Prior to that, I'll hand over to Krishna for a disclaimer.
Thank you, Mohit, and good evening, everyone. I'm pleased to welcome you all to Inox India Limited's result conference call to discuss the Q3 and 9-month financial numbers. Please note a copy of the disclosure is available in the investors section of the website as well as on the stock exchange. Anything said on this call which reflects the outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. With this, I shall hand over the call to Mr. Deepak Acharya, the CEO, for his opening remarks. Over to you, sir.
Good evening and thank you, Mohit Kumar and Krishna. I am Deepak Acharya from Inox CVA. Good evening, everyone, and hearty welcome to all the investors and analysts on the first result conference call of Inox India Limited post the listing. As you must be aware that we recently got listed in stock exchange on 21st December 2023, and this is our first quarterly result post listing. Thank you for taking the time out and participating in our result conference call. The unaudited financial result as well as the investor presentation for Q3 and 9 months FY24 have been uploaded on the stock exchange. Hope you had a chance to review the same. For the benefit of all who are listening to us for the first time, I like to brief and share the key highlights of our business. Inox CVA has 30 years of experience in design, manufacturing, installation of cryogenic equipments across the globe, making us the world's leading provider of customized cryogenic equipments today. Our business divisions include industrial gas, LNG, cryoscientific division, and are working continuously towards clean energy initiative in LNG, liquid hydrogen, and fusion energy. Over the years, the company has developed engineering expertise coupled with quality product offering and our unwavering customer service that has helped Inox CVA to make its brand value in this space. The company executes large turnkey projects and manufactures specialized non-cryogenic equipment also. The company has a large-scale serial manufacturing facility at 4 locations in India and part manufacturing and service distribution from one of the locations in Brazil, with service distribution extending to Netherlands as well. Very recently, the company undertook a greenfield capacity addition and set up its 4th manufacturing facility at Savli, Gujarat, at the project cost of 100 crores, funded entirely through our internal accruals. To optimize operations, the company has continually undertaken capex to support the growing demand into new application areas and strengthen the design function. Over the years, the company has delivered its products and services to over 100 countries, key geographical areas being US, Europe, Saudi Arabia, Brazil, Korea, UAE, Australia, to name a few. During 9 months FY24, the company recorded highest ever export revenue of rupees 501 crore, up by 75% year on year. Supported by buoyant market situation worldwide for our existing products used in industrial gases, LNG, hydrogen, and evolving new other applications, we have robust order backlog of rupees 1043 crore on 9 months FY24 with 50% orders from industrial gas, 23% orders from LNG, and balance 27 orders from Cryo-Scientific division. Export orders comprise 47% of the total order backlog. We have actively participated in various public sector tenders which are at different stages of awarding. In addition, we are engaged in discussion with numerous private customers for building LNG infrastructure. Let me briefly take up each of our business divisions separately. Industrial gas. Industrial gas registered a quarterly Q3 FY24 revenue of 214 crore and 9-month revenue of 571 crores, contributing 65% of the total income. Under this division, we manufacture cryogenic tanks and systems for storage, transportation of industrial gases such as oxygen, nitrogen, argon, hydrogen, CO2, etc. The various products manufactured under this segment are storage tanks, transport tanks, micro bulk units, vaporizers, cryo-bio tanks, storage and regasification equipments. Over the years, Inox CVA has continually moved up the value chain by developing expertise in designing and manufacturing cryogenic equipment from 1 liter capacity to 1 million liters capacity. LNG division. LNG division registered a quarterly Q3 FY24 revenue of 75 crores and 9-month revenue of 247 crores, contributing to 29% of our total income. Under this division, we manufacture standard engineering equipments for LNG storage, distribution and transportation. The various products manufactured under this segment are storage and regas systems for industrial applications, marine fuel gas systems, LCNG fueling station, vehicle-mounted LNG fuel tanks, LNG infrastructure for automotive applications, mini LNG infrastructure, etc. Certain marquee projects executed by the company are installations of mini LNG terminal in Scotland, UK in 2019, as well as commissioning of LNG dispensing station in Dahej. On Cryo-Scientific area, Cryo-Scientific registered a quarterly Q3 FY24 revenue of 6 crore and 9-month revenue of 37 crore, contributing to 4% of our revenue. Under this segment, we manufacture equipment for technology-intensive applications and turnkey solutions for scientific industrial research involving cryogenic distribution, including equipment for fusion research. The various products manufactured under this segment are satellite launch facilities, cryogenic propulsion system and research, MRI cryostats, fusion and superconductivity, etc. Certain niche projects undertaken by the company as we manufactured and delivered an MRI cryostat for the Government of India project. The company was awarded the contract for development of cryogenic equipment for second launch pad project of ISRO in the year 1999. In 2018, the company manufactured, installed and commissioned Comnavac thermal vacuum system for ISRO Ahmedabad. We also are proud contributors to the world's largest fusion research project by providing critical equipments, mainly 4-kilometer long complex jacketed piping to maintain ultra cold superconducting magnets operational under all conditions to ITER project in France, Europe. Let me share in brief on the overall financial performance of our company. I am pleased to inform you that the company recorded the highest ever revenue of rupees 875 crores and EBITDA of 270 crores during 9-month FY24. The major reason for increase in the robust performance by all our major business segments. Historically, on an annualized basis, the revenue of the company has been growing at a CAGR of 27% over the previous 2 years. EBITDA and PAT margins during the 9 months are 25% and 17% respectively. That reflects our highly specialized, customized and engineering solutions and favorable product mix. I am happy to share that we have been a dividend-paying company for the last few years. On the capex side, we have spent total of rupees 103 crores over the last 3 years up to FY23, which has been made through our internal accruals only. Due to high cash flow generation over the years, we are a debt-free net cash surplus company having cash and cash equivalent available on 31st December 2023 of nearly rupees 235 crores. Last bit on the financials, I would like to highlight that we are proud to have best-in-class return ratios with return on capital employed ROC 37% and return on equity ROE 28% on FY23. Let me now share the certain key recent business developments. Adani Total Gas Inox CVA has entered into a mutual support agreement under which the entities mutually accord a preferred partner status for the delivery of LNG and LCNG equipment and services for identifying and exploring possible collaboration opportunities for strengthening the LNG ecosystem in India. This collaboration with Inox CVA shall help Adani Total Gas in undergoing phased transition of long-haul heavy vehicle buses currently using diesel for LNG, helping over 30% reduction in CO2 and greenhouse gas emissions. Also, we help facilitate fast-track setting of LNG stations across the country for boosting the confidence of fleet operators to use LNG as a transportation fuel. Very recently, we signed an MOU with Inter-University Accelerator Center, an autonomous institute under the University Grant Commission, Ministry of Education, Government of India towards collaboration for the development of technology for the design and manufacture of superconducting magnets based for clinical, industrial and defense research applications. The synergy is to make India one of the global players in manufacturing a superconducting magnet-based system, including next-generation MRI magnets. The technology can be now indigenously developed, such as complex systems can be manufactured in India now. Recently, we also got following 3 patents registered. 1, LNG dispensing station. 2nd, invention on sliding spacer in the cryogenic piping. And 3rd, displacement decoupling arrangement for double-walled cryogenic piping system. These patents shall strengthen our leadership in cryogenic industry and differentiate our products for superior performance. Cryogenic landscape. The world is talking about hydrogen as the cleanest fuel, and we forayed into this segment since 1999. We are the first Indian company to manufacture trailer-mounted hydrogen transport tank designed jointly with ISRO organization. We offer complete solution for hydrogen storage, transportation and fueling infrastructure. With the proposed launch of National Hydrogen Mission, we anticipate good traction in this segment, and we are happy to share that we are well placed to optimize the huge opportunities in this space. Going forward, we anticipate high demand for cryogenic gases from the metallurgy sector, oil sector, gas, chemical industry, decarbonization, electronics, healthcare, space and satellite, etc. In addition, a shift towards cleaner fuel sources such as LNG and hydrogen in industrial and transport will provide boost to our products. For LNG, we expect strong demand from Asian countries like India, South Korea and other Asian countries, which are increasingly transitioning from energy sources such as coal, crude oil to nuclear and gas. At Inox in the CVA, our focus is on users in the remote island as well as industrial consumers with no access to natural gas pipelines. Lastly, I would like to acknowledge and be thankful to all our stakeholders who are associated with Inox CVA, above all, our employees. I am extremely thankful to Inox CVA team for delivering resilient work and striving for excellence over the years. This concludes my planned remark, and now I would like to hand over the call to Pawan Logar to take us through the financial highlights before we open the floor for Q&A.
Thank you, Deepak sir, and good evening everyone. A warm welcome on our first result conference call. I shall summarize the consolidated financial highlights for the quarter and 9 months ending 31st December 2023. During the quarter, total income was 295 crores, a growth of 18% from 250 crores of Q3 FY23. During the quarter, EBITDA was 71 crores, a growth of 23% from 58 crores in Q3 FY23. EBITDA margin was at 24.2% as compared to 23.3% in Q3 FY23. The improvement in profitability is on account of pricing, time to time and order to order. Normally, it ranges between 21 to 24%. During the quarter, PAT was at 49 crore, a growth of 19% from 41 crore of Q3 FY23. During 9 months FY24, the company recorded a highest ever total income of 875 crores, a growth of 18% from 74 crore in 9 months FY23. During 9 months FY24, the company recorded highest ever EBITDA of 217 crores, a growth of 22% from 178 crore in 9 months FY23. EBITDA margin was at 24.8% as compared to 23.9% in 9 months FY23. During 9 months FY24, the company recorded highest ever export revenue of 501 crores, up by 75% YOY, and comprising 57% of the total income. The company has a customer base spanning over more than 100 countries, and key geographies include US, Europe, Saudi Arabia, Brazil, Korea, UAE, Australia, and Bangladesh. Order backlog as on 31st December 23 is the tune of more than 1,000 crores, 1,043 crores. Exports comprising 47% of the total order backlog. The total debt as on FY23 is nil, providing adequate room to raise debt in future. Total net worth as on FY23 is 549 crores. The company has comfortable net cash position of 235 crores as on December 23 end. In June 2023, CRISIL rating has upgraded our bank loan ratings from CRISIL A+ positive to CRISIL AA- stable, and short-term bank facilities are CRISIL A1+. That concludes my update on the financial highlights of the company. I shall now request the moderator to open the floor for question and answer session. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur from HDFC Life. Please go ahead.
Yeah, thanks. Good evening, sir. Thanks for your time as always. Just a few questions. One was, this very strong order inflow growth that we see during the quarter, I think almost a 80% growth. If you could just help us, is there a large LNG order also in this, or, where are we getting these orders for industrial gases, which segments, or, which markets? If you could just help us.
Ankur, I think you mentioned about the 80% increase. What we were talking about is the last quarter, we have received the substantial orders in all the sectors. We have received the orders from the industrial gas sector, LNG sector, as well as cryo-scientific sector. If you see the situation 1 quarter before, we had a pending order of almost about 1,035 level, and the sale which has happened in the quarter is almost the same level that we have received the order. So the orders that we have come from major projects which are coming out of the industrial gas, as well as the projects that we have now from the cryo-scientific things.
Okay. No, what I'm trying to understand is it more of like base orders, or is there any large one-off orders also in this? Is what I was actually trying to understand.
Orders which we keep on getting. This can, some of the projects could come on, some other project could come up some other division. But this is a kind of a base one which is happening all the time.
Fair. Okay.
I'm not sure if everybody can hear me. This is Siddharth Jain speaking. Can everybody hear me?
Yeah.
Yeah. Yes, sir.
Okay. Thank you. Yeah. No, I just wanted to add that our last quarter was, it was a great quarter. I think approximately 295 crores of fresh orders, which is, in line with our expectation and our turnover, out of which about 190 crores was, I think, industrial gas. I mean, Mr. Acharya can correct the numbers, and about
52 crores in IT and 75 crores in LNG, and balance in cryo-scientific and others, making it to 295.
Okay, got that. And then clearly, you would expect this momentum to continue, right? So I'm just trying to understand, how are the end markets? Is it more exports? Is it more domestic? If it's more of exports and with geography. So if you just help us understand and give us a little more sense, on key end markets which are driving this kind of growth for you.
So I think the growth is being driven equally by all the three sectors. We do see kind of a stronger demand coming up on the cryoscientific area right now, mainly because of some of the major projects which are now coming up on the scientific research area. We do see that there is a consistent demand which is coming up for LNG. As you must have heard about the collaboration or the agreement that we have signed with the Adani, that is also opening up new doors, and they are having aggressive plans to go ahead and further for distribution of natural gas. We are constantly dealing with several institutions and the customers where the projects are on the anvil. So I would guess that the trend that we have as far as the past is concerned, we expect that to continue even going forward.
Okay. And if you could just remind us, what would be your 24 guidance on top line margins, if any, if you could help us with that?
Let me take that, Siddharth Jain. Of course, we don't give guidance for the future, but as we said during the IPO time, that we expect our past trajectory to continue in the next few years. And as you can see from our current results, I think we see that trend continue.
Sure. Okay. Fair. All right. Great. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Prateek Bhandari from Art Ventures. Please go ahead.
Hi, sir. Good evening. Am I audible?
Yes.
Can you tell me what was your capex for the 9 months FY24 and what you are willing to do as a capex for the coming up quarter, and also the capex for the upcoming financial year, that is financial year 25?
Actually, for 9 months, we already incurred about 90 crores, 95 crores, and in the next quarter, we will incur around 25 crores more. And this is mainly because of this Savli project, which we already shown in our IPO also. Now the production already started for this Savli, and from next year onwards, around 50 crores, around 40 to 50 crores will be there, and around 15 to 20 crores will be for maintenance capex every year.
Okay. And can you throw some color on the margins that you are willing to maintain for the coming financial year? Will they be in the same lines, or we can see any improvement? And if there is gonna be any improvement, from which business vertical you are seeing the same?
Normally, we will maintain our margins in a similar way. However, a few basic points here and there in the different divisions will depend upon the type of the order and the specialized equipments we have to supply. But normally, it will be almost similar.
All right. Thank you. Thank you so much.
Thank you. The next question is from the line of Prachir Jain from Sri Kalyan Holdings. Please go ahead.
Congratulations on the robust performance of your company. I would just like to ask you, the collaboration of the company with Adani Total Gas, how much will it contribute to the revenue of the company, and how long will it take to reflect in the balance sheet and the profit and loss of the company? Thank you.
Yeah, Adani Total is a preferred partnership. We have signed a MOU with them, and they have very major plans for LNG as a vertical for them. And in coming 2 to 3 years, they will be expanding heavily, especially on the fueling station, LNG station, satellite station, and maybe the conversions of their mining and cement trucks to LNG as a fuel. So though the numbers are not clear to us as on today, but they expect a substantial addition into the LNG business on this.
And this is a long-term contract?
It's a long-term contract. It's at least we have like 5 years contract with them, and if required, then it can be extended.
Okay. Thank you.
If I may just add, Prajay, you see, when Adani is building out, when Adani Total Gas is building out this LNG infrastructure, it requires a lot of, for us to collaborate with each other on an engineering basis as well, design, engineering, planning. So, we're going to work with them, to help them design the equipment that they need to fulfill their needs. So, numbers is one part. This is not just about a commodity supply. It's about system supply. So that's the difference.
Okay. Thank you, sir.
Welcome.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. We have the next question from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead. Nikhil, the line for you has been unmuted. You may proceed with your question.
Hello. Yeah. So thanks, sir. Thanks for the opportunity. So we were also participating in PSU tenders for CNG station. So can you throw some light on that as to how many tenders we have participated? Are we L1 in some of the tenders, and how do you see the prospects of them going forward?
So we have been participating in the several tenders so far, and just a minute. For LCNG, we have been with Gujarat Gas, Torrent Gas, Indraprastha, IRM, Singh Gas, HPCL, BPCL. So almost all these places we have received the orders, and many projects like GAIL and other things, they are under the bidding stage, and we hope that with whatever the track record we are having, we'll certainly get orders from these PSUs. Even we have supplied a lot of critical equipments to IOCL for their 26 LNG fueling station projects.
Right. And sir, when you participate in this PSU tender, how is the competitive intensity? Can you just name a few, some of your competitors who are always present in this bidding?
So we have our major competitors is the Chart VRV in Chennai, and there are some local other manufacturers who also bid. But whatever we have seen in the past, our rates are very competitive, and our product has a very good acceptability in the market. And with the very critical specifications they are putting in the RFQ, we get the leading hand on all that.
Okay. And sir, are we also willing to participate in LNG fueling stations?
Yes, we are participating in the LNG fueling station in a big way. And we have already commissioned HPCL and BPCL projects, and so many other projects are in hand now. We have got a few stations from Adani Total as well for LNG fueling.
Okay. So going forward, is it fair to assume that our share of domestic sales will be higher as compared to exports?
So it is almost like 50-50%. Maybe sometimes 48-52 like that, but it is normally last few quarters it is 50-50.
Understood. And just a last question, sir. Our order book is almost 1x of our FY23 revenue, almost on. So what exactly is the execution cycle of this order book, and just this much?
Normally we have two major products. One is standard products and another is custom built products. Or the cycle time for manufacturing of standard products is roughly 3 to 4 months, whereas the big projects, it ranges from 8 months to 12 months maximum. So this is the time period where we normally finish such projects.
So within 1 year we execute the entire order book?
1 year, yeah. From the scratch to completion.
Understood. And sir, on this agreement with Adani Total, you mentioned on the call that we are at the stage of designing and basically doing all the ground designing work as of now. So when should we start the actual order booking from this agreement?
Already we have started order booking. The 3 earlier stations, what they were having, so we have helped them in